at this stage have Feroz Aziz, Deputy CEO of Anand Rathi Wealth, joining us. Feroz, thank you so much for taking time out to be with us here on this budget day morning. Markets opening flattish in the green. The charts say about 1.5% up for the Sensex and the Nifty. Talk to us, how do you see the trading day pan out as far as budget day is concerned? How much jitters do you think are there on the street?
I think there is more skew towards positive than negative because all the three larger participants have gone reasonably light or they have been bullish. One is FIIs have gone light on index futures, which was 88% negative short side on 30th of Jan. Only 11%. Of course, you got some degree of short covering. I think the number dropped to 82, 83 yesterday. On the long side, on the cash market side, FII have gone short. The prop guys who are the FII prop has sold most of the small cap stock. That's where the carnage of 11% fall comes from. It is not the index FIIs who have sold. Those are the prop short-term traders. ARB guys have sold. So they've gone light completely. So the broader market is a lot safer today. Then BIIs, if you look at mutual funds, small cap, yesterday there was 349 crores came into small cap funds, which is a reasonable barometer of the domestic sentiment. Retail, only leveraged retail has sold in the month of January. Wherever they've taken margin funding from the broker, those have got unbound. Other full cash down retail and HUFs and corporates have not sold last month because they don't like selling a stock 30% down. So I think they've gone light. That's why you see yesterday the synthetic futures closed at 85 rupees premium. In the morning, it's quoting at only 15-17 rupees premium, which says that yesterday when markets closed, they were far more bullish than they are in the morning. I personally think there is very little chance of a free fall, even if there is some degree of bad news or lower than expected market sentiment from the budget.
I just want to bring up some data, and if you can pull up corresponding graphics for that as well. Out of the 7 budgets that Finance Minister Nirmala Sitharaman has presented thus far, today being her 8th, markets have actually ended positively just twice out of those 7 times that she has presented budget, and all other 5 times markets have been in the red. And I don't know if that's a sign of things to come today or not, but what are those 2 or 3 triggers that you think will excite markets? Because I don't know if it's fair to say that the bear run is in right now, but there is this bearish sentiment on the street, barring maybe, just yesterday and 2 days prior to that, where we've been able to breeze past that 23,000 level on the Nifty. But that sentiment does seem to be bearish right now, not just with what's happening in India, but what's happening in the world.
Yes, Karthik, what happens is the larger the bearish sentiment before an event, the larger the likelihood that there could be short covering. When you are going with a lot of froth into an event, I think that's the data of 7, 5 of them being negative and 2 being positive implies that there's a huge expectation of Nirmala ma'am, and she that's already priced in. So that's what it implies. So we might now, if you look at the 23rd July 2024 budget, where after the general elections of 4th June, we saw a huge long build-up in every index future. If you look at FII as a reasonable barometer of how leveraged the market is, all the index futures, including the mid-cap index futures, FIIs were more long. So point I'm trying to get to is, since there is a reversal of sentiment in most of the last 7, that implies that there was a huge expectation of bullishness, and this one is a little opposite, where there is more bearishness getting into a budget, which has not happened in the past couple of budgets at least.
Expectations are very high, isn't it, Feroz? Be it the corporate sector or be it the individual taxpayers out there who are trying to save as much money as possible and invest it in everything from directly in stocks to mutual funds, relief in terms of more disposable income in the hands of the middle class, and relief for the corporates in terms of, possible, way forward in terms of cutting down of interest rates, and more importantly, a possible cut in corporate tax rates as well. So the expectations are going through the roof from all across the board in this budget.
Yes, certainly the expectations are reasonably high. But I think the expectation from the budget, if I have to say from our side, we look at simplicity, which I think has been the theme. A consistency of, because it's a budget which is just spaced 8 months after a budget we've just seen in July. And there were a lot of changes made. All the asset classes, taxation changed, unlisted equity, listed equity, debt, all of them went through a tax change, including real estate. And that's why I don't expect the direct tax code, which is one thing which I'm really looking forward to make too many changes. But the direct tax code, which she spoke about in the budget speech last time around, is something which could bring in a lot of simplicity. There are about 70-80 sections, which I call the Jugaad sections. They should be gotten rid of to make simplicity. If you look at our budget this year, we are in tax administration, we are spending 2,09,000 crores out of our 48 lakh crores. So we are spending 4% to just administer taxes in the right fashion. So simplification also saves money for the government, not just eases the life of the SSC, point one. Point two, I personally expect, these are structural changes I'm speaking about, no partiality towards asset classes. Section 54 and Section 54F is the biggest partiality known to mankind, where you sell equity, buy real estate, you get a tax discount on equity. If you sell real estate and buy another real estate, you don't pay tax on the previous property. Assume if this was done on mutual funds, what kind of impetus does the multiplier effect of capital investments could come? So I personally, in spite of managing HNI money, would hate me to say this, I think they should get rid of inconsistencies or partialities between asset classes. Indexation was brought back for real estate, but not brought back for debt funds after the lobbying in the last budget. I think these inconsistencies should be removed. That's my expectation. Of course, there are a lot of expectation, and you are the best judge of how the industry and the retail participants also expect. But these were some of my expectations which stand out.
Well, we can't talk about who's the best judge here, because we're all, waiting for that final presentation of the budget document. Nobody knows. One is there is an urgent need to spark growth, bring it to the levels that India needs, and the other is to ensure fiscal discipline, because fiscal discipline will also ensure enough and more foreign money comes into the country. At a time when we're worried about foreign portfolio investors taking money out of the country, the economic survey alluded to the fact that so much money has left the country through foreign portfolio investors. FDI again not at its peak levels, far below its peak levels. So that balance is going to be very important, isn't it, Feroze?
Yes, certainly. I think fiscal prudence is very critical. But as far as where we see it from, measuring fiscal deficit as a percentage of GDP is one way. We look at it not as a percentage of GDP so seriously, but as a percentage of total revenue. See, expenditure is a bank account debit, revenue is a bank account credit. Seeing it as a percentage, as a household, how much do I earn, how much do I spend? You would see that in FY23, our fiscal deficit as a percentage of revenue had gone to 71%, and it is today 50.3%. That means if I'm getting 48 lakhs of expenditure, I'm earning 16 lakhs lesser, 32 lakhs. That's in our opinion, more tangible method of measuring fiscal prudence than the GDP, because GDP is not a bank account credit number. So to answer your point of question, it is very important, fiscal prudence, but I would use the barometer of how much do I spend more than how much I earn, which is expenditure, excess expenditure as a percentage of revenue. That's 50.3% for this financial year. Second, when it comes to growth, I'm very happy to note that last year's capital expenditure budget was not academic. It was actually spent apart from 50,000 crores. So I'm very, very hopeful that again, the expenditure of the capital expenditure budget of 11.1, which is the one which gives you a 3.2 multiplier in the economy, I think should do the trick and get us to that 7% number and supersede the economic survey's expectation.
Right. Thank you so much, Feroze Aziz, for joining us this morning in the build-up to the budget. We'll let you go at this stage. Hope to see you soon